I'm here to give a short overview of SKAGEN Global in March. The fund was relatively flat in absolute terms, increasing by 0.5% during the month, and underperformed its benchmark on a relative basis, which was up nearly 2% during the same period. One new company was added to the fund during March, and we bought back the shares we had previously sold in another. No companies exited the portfolio. We added to an existing position and reduced the size of our holdings in 3 others. The cash position at the end of the month was 6.2%, down from 6.8% at the end of February. The portfolio remains attractively valued on a price to earnings and price to book value basis, in absolute terms and relative to both the benchmark and the historic average of the fund. SKAGEN Global has increased by over 11% year to date, which is below the performance of the benchmark. From a longer term perspective, it has delivered annualized returns of nearly 18% since inception in 1997, which is over 13% better than the index. Looking at the drivers of performance year to date, Citigroup tops the winners list by quite a distance. The US Bank, which is the second largest holding in the fund, was the best contributor in March, as new efficiency targets set by the new CEO, Michael Corbett, were well received by the market. The shares were up 7% in US dollars during the month. 2 vehicle manufacturers, Toyota and Renault, are also in the top 5 list of positive contributors year to date. Toyota Industries, which is a 1.7% position in the fund, has seen its share price increase by 28% in local currency during the first quarter. On the negative side, although not part of the largest detractors for the quarter, Oracle was the biggest loser in the month of March. The US software company reported third quarter earnings that were below market expectations, with the development of new software licenses in particular being disappointing. The shares were down 9% in US dollars during March. Looking at the list for the quarter, China Unicom, which is a 2% position in the fund, has been the biggest drag on performance. Its share price has been weak due to fears that an earlier than expected rollout of 4G infrastructure in China will negatively impact Unicom's window of opportunity in 3G. We don't think this fundamentally changes the investment case for the company, and the full year results, which were announced last month, seem to support our conviction in the business. The second largest detractor has been the Norwegian oil services company EMGS, whose order book has been substantially lighter and the visibility of earnings has consequently been reduced. Looking at the composition of the portfolio, there were a few changes in March. A new portfolio entrant was Technip, which is a Euronext listed company providing project management, engineering and construction for the energy industry. It has a strong position in the offshore and subsea market with a solid balance sheet and a good backlog of orders. We see a growing demand for subsea installation projects going forward, and the company looks attractive on valuation grounds, with the share price having fallen following a profit warning from one of its peers. No companies exited the portfolio, but we continued reducing our positions in Gjensidige and SCA after the share prices of both companies positively re-rated. We also reduced our position in TE Connectivity for valuation reasons. That's all for this month. Thank you for watching, and for more information, please visit the SKAGEN Global section of the SKAGEN website.